Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is November 11th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I am not your financial advisor or anybody's financial advisor. So please do your own research and make your own decisions. Okay, Tesla still down a little bit today, down $4.44. Minus 0.42%. We closed at 1063.51. Post-market, we are down further $1.71 at 1061.80. Let's look at what this looks like on the chart. So only looking at numbers doesn't tell us much because we are down $4. But look at this here. So we had a higher high of the day and we are making a higher low of the day. But the overall trend in the market today was down because we have a red candle here. We are still in the congestion zone between 1027.25 and 1116.82. So we are still in this congestion zone. And this line right here, let me see this line right here. Yes. This line right here, I'm just going to show it in the hourly chart. Like, yes. This is where we are at right now. Let's look at the 1 hour chart. So what happened today is that we opened quite high, relatively high. So we opened at 1104.97, but then it was a brief high because then within the first hour, we came down, then a little bit of buying pressure towards the end of that hour. And then look at this, cannot make this up. We have a resistance on the hourly chart at 1079.82. And we touched it here at 1030, like we touched it on November 10th at 1030 also. And we touched it here November 9th at 1130. So this is a smaller intraday 1 hour congestion that we have right here. So second hour, we touched that resistance. Third hour, a little bit lower, then started climbing back a little bit. And then pretty much sideways, but with a little bit of a slant up. We had this resistance right here that we started approximately November 5th at 2:30. This is a resistance that we drew when things started to go a little bit lower for Tesla. This resistance has been broken. So the slope of descent that we started to feel from November 5th to November 9th, this slope of descent, which was in effect until today, is no longer in effect. So whatever happened in the market, Elon selling shares and everything, whatever happened in the market has been slowing down a little bit here. So now we are out of that resistance and it has now become support. So on the 1 hour chart, we are within a congestion zone between 1027.25 and 1079.82. For those who are a little bit more short-term oriented. Let's look briefly at the indicators. So stochastic at 40, stochastic is under 60. And even with this move up, so this was a great example of how you can use stochastic to spot fake moves. This was a fake move because it did not make stochastic go up hardly at all. Until we have stochastic heading to 60, then we can start taking seriously any move up that Tesla does. MACD broke over bullish. That descent seems to have stopped for now, and we are going a little bit back up. This is enough for MACD to cross over bullish. MACD is really looking at the close of the days, the close, and in this case here, the close of every hour. So at the close of every hour, if we do a moving average, this is what MACD is showing here. So it does not take much for MACD to show a bullish pattern, but it does not necessarily mean that there's a pressure for the stock to go up. It just means that on average, the close are getting higher. This is what it means. It can stay there. It can stay flat for a long time, but MACD will still show this crossover back as soon as the descent has stopped a little bit. So if you want to know if there's really a move behind the stock, you need to look at stochastic. So stochastic over 60 is going to tell you that, because every move in the stock has happened when stochastic has been over 60. You can just look at it here. October 11th, stochastic started to go above 60. And boom, 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 look at this. This is what happened. And now we are below 60. Nothing is really happening. So this is really fail safe. And DMI is completely bearish here. So DMI is a longer term indicator. So if a stock does a move like this, stochastic might move up to 60. But this does not mean that this move will last a long time. If it has to last a long time, then DMI will turn green to indicate that, yes, it stayed up enough so that it should continue going up. But if you don't see the DMI turn green, but you only see the stochastic go above 60, then you can just have a little bit of a peak like this. You can invest and make money on that peak if you are more a short-term oriented person. And if you are a more long-term oriented person, then you might need to wait for DMI to also cross over bullish. Okay, right now there's no strength in the stock on the 1 hour chart. So it's basically flatlining, even though we had this higher high. One candle does not make a trend. So this is an exception that confirms the rule that we are in a congestion zone, even on the 1 hour chart. And all of the indicators are pretty much indicating just that. Let's go back to the daily chart. Let's look at our indicators right here. So we have stochastic that's went down a little bit. So we were at 59 yesterday, very close to the 60. And now today we are back to 58. This is still telling me that, yeah, the stock is not ready yet, even on the daily chart. We could have some great news tomorrow that changes everything. But if we are looking at the current trend, nothing is telling us that this is significantly starting again. In terms of RSI, the relative strength index, we are still in this downward pattern for the strength for the RSI. So until we break this here, this line here, then the move will not be really significant. MACD crossed over bearish a couple of days ago, but DMI is still positive. So long term, this drop in Tesla did not affect the long-term bull trend. So the bull trend is still intact based on the DMI. So we are suffering from a short-term dip. This short-term dip is not yet over. And if we break this support right here, then that short-term dip might become a downward trend. So it's not a downward trend right now because we are still above this support right here. And this is also confirmed by the DMI that we are still okay from a longer term perspective. Thank you very much for watching. Thank you for liking, commenting, subscribing. You can become a YouTube member. You can click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow and I'm going to tell you à la prochaine.